Welcome back. You're watching Crystal Ball. My guest today, Akash Prakash of Amansa Capital. What are the possible speed breakers you see over the next 6 months, Akash? Because that's one thing which a lot of people might be looking to assess as well, if only to spot opportunities to get in when the market gives you these running corrections. Do you think monsoons or any kind of its impact on inflation or Reserve Bank action could be a speed breaker over the next few months?
Yes, I mean, if you have a very bad monsoon and food prices spike and the Reserve Bank is forced to hike rates, that obviously will slow things down, because that's obviously not something you want, and it's very tough for the market to keep going up with interest rates rising and liquidity tightening. So that I think could be a speed breaker. Global factors could be a speed breaker if something chaotic happens in Europe with this whole Ukraine-Russia thing, or something, or if suddenly bond, I know 10-year yields in the US have actually come down this year, contrary to people's expectations. But at some stage, if the Fed actually starts hiking rates, or something happens which could be disruptive for global markets, that could be a speed breaker. I think short term, May 21st is very important to see who Mr. Modi brings into the cabinet. I think one of the problems of the last UPA government were a lot of the critical ministries were helmed by people who were not quite underwhelming in terms of their capability. I think the critical ministries this time, you've got to see solid people with good experience and good credibility coming into critical ministries. So for example, as I said, I mean, I think the short term, people will want to see what is the Modi cabinet, and what do they do, both cabinet as well as the critical secretaries. What do they do short term in terms of quick actions, which are in terms of clearing projects, or stopping stopping these tax, I think tax terrorism someone called it, reversing the retrospective tax, all these small things. So I think people want to see a lot of that stuff happen very quickly. So I think short term, the Modi cabinet and the key appointments of bureaucrats and ministers. After that, the monsoon. After that, global factors. All this could be speed breakers or speed blocks on the way. But I remain optimistic. I think India has a real chance to break out now and do really well over the next 3 to 5 years. I hope the Modi government and the new government takes that mantle and really delivers strong governance, in which case the markets will do really well.
How would you construct your portfolio now, Akash? Because last few months have belonged to banks, cyclicals, which is a clear departure from with the portfolio that worked over the last 2 years that preceded it. Do you continue to back these domestic-oriented stocks? Or how do you tailor your portfolio to play this phase that you're talking about?
Well, we run a very stock-specific portfolio, very bottom-up, and we don't really run sector thematics and stuff like that. So, but what I will say clearly is, I think the mid-cap theme is a long way to go. Mid-caps are still very cheap compared to large-cap stocks. Mid-cap stocks will do incredibly well if the domestic investor base chooses to come back to the markets. So I think there is still a lot of value in mid-cap, medium-sized companies, and I would look at that as a place to definitely deploy capital. The sector rotation between cyclicals and defensives has already begun. I think it's been going on for the last 3 to 4 months. There's still some way to go there. I think some of the defensive stocks will remain under pressure, consumers specifically, because the consumer stocks are still very, very expensive. And in an environment where people are looking at earnings acceleration in the more economically sensitive stocks, like be autos or banks or something else, the consumer stocks are actually seeing earning deceleration, because of they're the last sector which has taken the hit from the weak economy, and now they're facing the pain in terms of volume growth and earnings growth and stuff like that. So I think you've got to be stock specific here. I think you've got to look at stocks on a 2 to 3 year basis, look at what you think is the earning power of a specific company on a normalized economic environment. If you get back to 7% economic growth, you assume interest rates come down by 100 to 150 or 200 basis points over the next couple of years. What is the earnings power of a specific company, and look at it from that point of view. I don't want to get into sector thematics, because we don't run our portfolio that way. We run it very bottom-up, stock-specific. But I think mid-caps has to be a clear area of focus, because they are very cheap, and the underperformance of mid-caps has been dramatic in the last 5-6 years. That underperformance has only just started correcting, so there's a long way to go there.
What about banks? I mean, they have clearly led this rally. Without getting into individual names, broadly, is this a good time to get into private sector banks after how much they have rallied, or would you wait for a dip or some kind of consolidation in valuations?
I think there are some private sector banks, which are not as expensive as the tier one private sector. The tier one private sector banks obviously are very expensive, between 3 to 4 times book, some of the leading ones, which are great banks, but I think they are expensive. There are other private sector banks, smaller, more regional niche type of banks, which are trading at 1 to 1.5 times price to book. I would definitely get into them because, I think the financial sector will obviously do very well because, as I said, I expect interest rates over the next 2 to 3 years to come down. I expect credit quality to improve. And I think banks which are well capitalized will do very, very well because the reality is, unfortunately, the public sector banks are massively short capital. They're very, very undercapitalized. So anyone in India who has significant capital is at a huge competitive advantage today because as the growth comes back, they will be in a position to lend when a lot of the other banks which don't have capital will not be able to do so. So I would stick with the smaller, more regionally oriented private sector banks which are trading at 1 to 1.5 times price to book, which are well capitalized, which have private sector like management. I think there are lots of them in that space still, and I think that's a very attractive trade to come. I'm not a believer I don't believe the public sector banks can be turned around very quickly. I think Mr. Dr. Nayak has given a whole bunch of very credible and needed reforms for governance and how the public sector banks are being governed, and if those reforms get implemented, I think the public sector banks will be a very good trade. But I think that's a very politically difficult reform to do. I'm not sure that's the first thing Mr. Modi will attempt to use his political capital to do, which is to try to privatize public sector banks or to allow them to merge or consolidate. Stuff which needs to be done, and if is done would make public sector banks a very attractive trade. I think the public sector banks will take a lot of time for these reforms to actually get implemented, and therefore I'm less enthusiastic about the public sector banks than I am about private banks.
Just moving away from public sector banks per se, Akash, because in the last few days the market's given a massive vote of or a thumbs up to public sector companies in general in the hope that the new government will finally galvanize them after many years of underperformance. I mean, from ONGC to NTPC to Coal India to BPCL, everything's gone up such a lot. Do you buy this optimism that public sector is the place to be now with the current government's dispensation?
Well, I think it depends on your view on. I think I would wait for a week or 10 days to see the composition of the Mr. Modi, of the Prime Minister's cabinet, and who are the critical ministers and what are their initial, do they get some technocrats and outsiders into the government? Who are the critical bureaucrats and stuff like that? I would wait for that because I'm not sure how high up on the agenda that is of the new government. So I think the PSUs were very cheap, and they were probably trading as if they had no future at all, which was probably an extreme. I think some of that trade catch-up has already happened. I would wait to see the composition and the initial actions of the new government before taking a view on that. I am frankly not sure how high up on the agenda that is and what they will do on the public sector side. So I'm not playing that trade at the moment.
You spoke about consumers and the fact that their valuations might need to come down a bit more. What about IT, which was the market's blue-eyed boy for the last 2 years? I mean, they've started underperforming. Would you use this underperformance to accumulate anything there, or do you think they need to, this relative underperformance will play out for a whole lot longer?
I think they will continue to underperform for some time, but I will use that to actually add weightages in IT because I think they are absolutely outstanding companies. A lot of the IT companies are trading at 12, 13, 14 times now for 35% ROE, massively cash-generative businesses. Also, I don't share the view the rupee is going to 55. I think the rupee will remain in the 60 to 62 range for the foreseeable future. I think the Reserve Bank and is not interested in the rupee appreciating and making the same mistakes that the previous Reserve Bank dispensation made of letting the rupee become too strong, which led to a current account problem, a competitiveness of Indian industry problem. I think the rupee will be around 60, 62. It's not going to 55 in my opinion. And at 60, 62, if you assume that is the working assumption for the rupee over the next 6 to 12 months, the earnings of some of the IT stocks are really quite cheap, 12, 13 times. And I think they're world-class businesses. I think the US is also recovering. So I think our growth outlook for IT is actually pretty good. So I think they will underperform for some more time. But I will use this underperformance to actually add money into IT. So we would look at buying IT in this as we speak right now, because some of them have really become down to very good valuations. And as I said, I do not believe rupee is going to 55. That's my personal view. I could be wrong, but So I think some of the bearish assumptions in IT that rupees 55 or 50 and therefore they'll have negative earnings growth, I don't subscribe to that. I think they'll still have 15% earnings growth at least in most of the IT companies, and they're really genuinely world-class businesses which are very well run and good governance and very high ROEs.
Akash, always a pleasure. Thank you very much for your time today. Good speaking to you.